Well, good morning, good afternoon, and good evening, depending on where you are. Hopefully, everybody can see my screen. Hey, today, this is Scott Henderson. We are going to go over swing trade notes, chart, see where that leads us. At the end of our presentation, please do review our disclosure. Thank you, David. Thanks for joining me this morning or this afternoon. All right, let's start off with the dollar here. We are actually just absolutely neutral here from the breadth standpoint. However, what I see here is that our D potentially is in, and if we start pushing up towards this resistance at 102, that's going to be very bearish equity. So this little pump that we got here to the downside was actually what drove this last rally, which is actually a very shallow flush for the dollar. That just expresses how exuberant I think the response is in the market because of how thin liquidity continues to be. And the challenging part here is we are running into some significant resistance. But before I jump into the equities themselves, I want to point out TLT. I think we're heading for my 83. I think we do break down and continue. Equality for an ABC down to the downside would be something very similar to this. Just assuming that was our B, then we'll get a C. So we could actually break below there, test these lows. So we're seeing a little bit of a response now in bonds. If you've been following the metrics of my survival score, we really have not come off. So there's really no release of pressure. So the pressure still is coming in from just about everywhere else. All right, now jumping over to the S&P. Now, I have not gone to a negative look here, but there's a very good possibility that we flip right back over here. And the reason I'm saying that is because breadth is not expanding aggressively, and now we're starting to see some tremors in the CapEx as far as AI is concerned. And I think you can pretty much watch NVIDIA, and that will give us our tell. As soon as semis roll back over, or SMH as an example would be a good tell, that's something we really want to watch, because if the chips roll over because we expect a stalling in the CapEx, or orders are canceled, very much like what happened with Oracle and OpenAI, and the fact that they were pulling away from certain chips or certain boards, etc., basically just ripped away any gains that were there in the name. And actually, it's held up well, considering that. I just looked at the chart this morning and said, well, I'm not going to hold that here, simply because I don't know that we're done as far as how many shares or how many stocks are going to come off related to that CapEx. That's a big what if for me in this market. So looking at the S&P, I'm still showing my maps as far as wave 3, the extension, shallow, and then we get a decent pullback. My bias is kind of in the middle. However, the longer we stay here, the more likely is we get a decent back test first, and then we're going to find out whether we're going to launch. But note is we have flushing dry. I'm looking at this as our flat. So I'm looking at this as our 1. This is our 2. So if this is done, that's our 3. There's not, you can have a jagged impulse and we still could come in and test the floor. I would rather us test the floor from a technical standpoint, because then I have more conviction than I do here, because I really don't have a lot of conviction at all that we're going to continue to the upside. However, that is the most likely outcome historically if we look at the industry. Jumping over to the NASDAQ, pretty much a similar look. However, I think that as long as CapEx holds, I think there's a good chance that we start seeing the Mag 7 outperform again. And, that's basically been the MO since 2020. And I don't see that changing. So just with that in mind, I'm going to look at crypto and get over to our stock. Now, there was a comment about Fundstrat thinking that the bottom was in Bitcoin and the euphoria. Let me just come in and talk about the slope a second. Look at our rallies and how aggressive our pushes were in this leg up. Notice this retrace. Notice how the demeanor changes in the tape. So you get a shelf, clean shelf. So here's your first step. Got another minor step. got another step, gave us a decent back test. So, we got two solid steps. And then we broadened going into our third step. And then, we got our three peaking drives to the top. The challenging here is this really is not an ABC to me anymore. I mean, we could say this is an equal ABC and it's done, but we don't have the same euphoria. I mean, we just go back and look at all of our legs. We don't have that same euphoria. So I don't know that I agree that it's done. I think it's just as likely a ending diagonal, which would look something like this. And it's just, we don't have the oomph that's coming into. So let's say we get this broadening formation and does something like this. I would have much more conviction if something like that played out as far as the look, from a chart, basically how Elliott wave plays out and maps. So your ending diagonal really sort of becomes a flat and your 5 just overshoots your 3 a little bit. So that would give me some more conviction. However, we really don't have, we have a lot of noise right here. And, once we took this ledge out here, as far as once that gets taken out, it really does open up $37-38 to the downside, which again makes that very challenging. All right, let's jump over and look at some stocks. I'm in such a tight box on my scalps now. I'm in a trade for 3 to 5 minutes, pull out my 5 to 7%, and I'm done. I'm not holding duration at all, which is one reason I can't really post that short of a trade in chat, because by the time I get it posted, the trade's already done. So it's really not fair for you guys for me to post those, because you'd be on the wrong side of more of those trades than you'd be on the right side of. So looking, I cut Oracle and ARO, and bottom line, I just didn't like this look. We wicked below there. We were below the invalidation line. I was going to hold it till Friday. After I took a look at Oracle, I was like, no. I'm just looking at what's going on with CapEx, too much to the downside. I still like Oracle long term, but I'm probably going to end up jumping back into it at some point because it's just a name that I've decided I want to keep. So the news, so assuming this is our one, pretty challenging, but the number is this becomes a ending diagonal, maybe something like that, and it takes that out. Now, Lint is sort of my way to jump back into crypto. Have a little piece on. Really, there's not any euphoria here. I mean, we have some pretty a confirming low, our lowest point in RSI here, right? But we don't have the lowest low in price. So could this continue? This also could be an ending diagonal as well. But in my mindset, my thought was put a piece on and add at 650 if we get down there, and then I'll just try and build that position back to the upside as that occurs. Sentinel finally caught a little bit of a bid, but seeing a little rejection right here at the moment. I really would love it to get back above that confirmation and hold that. That's really where my conviction grows, and that's where I will be at a full position. All right, taking a look at Google, still working, looking back to the upside. This is my favorite name in AI. I don't see any reason for that changing. Again, I continue to keep expanding my relationship with Google simply because of the tools that are coming out. They're absolutely just insane, and I think that's going to continue to grow, and I think many other people do the same. All right, now let's jump over. I wanted to cover Bloom. I think we're heading up towards this 4236 36. Now notice we're at $280. I think it's got a lot of upside. We got some serious euphoria here. I mean, we really do. So, this, I may be shallow here. I mean, we could literally, this could become $1,000 stock here. So now, going back to the RSI structure of this, our confirming high is on our second drive. So if I consider this, I'm looking at this as the flat, but this could be our one. If that's our 1, this is our 3, and 5 will end a little shallower at the 2618. But when I look at the RSI structure here, we're going to get a higher high here and a lower high in RSI. And that because this will be peaking drive 1, we should get a peaking drive 2, and then we should get a peaking drive 3. So we'll get another mound structure over here. So this really is a solid looking tape here to the upside. Any pullback, if you're looking to get a position on in the energy sector, pretty strong look. All right, NBIS, it has broken the shelf. Now, when, the challenge, we've been in such a bull market for so long, I don't know about you guys, but when we get into kind of a mixed market where we don't have the euphoria, we don't have the impulse, we don't have breadth expanding, we sort of have to step back and look at the basics here. So how stocks move is that you get your impulse leg and your corrective. The more euphoric the corrective leg is on the tape, quite often, the more impulsive it is back to the upside. We have that here in NBIS. So 5 could be in. Could be done here. It broke the shelf. That reduces my conviction by 50%. So I'm going back to the basic rules. So now if we're going to we lose this next body of this candle right here at, stick for me or what? Roughly at 124.95. I would cover my position until we get back into this box. Now this is a retrace box measuring this entire leg from the trough all the way to the peak, assuming that's 5. So this is where I get interested to re-enter NBIS on that kind of a pullback. That's just my thought as far as the look here. It may not be done though. This could be a 1 and a 5 and another impulse just like this. This is the argument I have with myself a lot when I'm looking at a tape. And like, okay, well, why is this bearish or bullish? We literally could flush here, come in here and do something like this back to the upside, and it would have done nothing wrong, as far as the way the tape looked. Simply because 3 is the longest wave, 5 would be shallower, right? So it could tighten up a little bit, but still in wave 5, wave 3 still should be the longest wave again. So if this is wave 1 and this becomes wave 2, then, our impulse should be much more aggressive to the upside. And we could see a very similar slope to this. And this is just our consolidation where we're just grinding through price. So unless it takes out that 124.95, I'm still very bullish on the look. All right, looking at Uber. It looks to me like it fails here. We're right at our trend support. If we look at our wicks here, off of these numbers, we've tagged it, it's held, which is good. We need to clear this 79.23 for me to say, yeah, hey, I'm bullish, I'm going to add to this, or I'll think about adding to this. And then I'm going to come in and I want to look at my volume structure coming in there and really make the decision based on that. But it breaks below this 69.02, I'd be out because it's going to come back and test 61. You're going to lose $8. All right, AMTX. Now, we could be done here, as far as this pullback. Good spot for us to hold. We were out all this consolidation. So it was good spot to put in a higher low. However, structurally, our ABC doesn't look done to me here because we did, this is our A, this is our B. So where'd C come in? We haven't done C yet. So from a corrective leg. Now, if it's not an ABC, then it's an impulse. And that's what I call these distorted impulses, where 2 is much shallower than it normally would be. And then we get our wave 4 and then usually get a flat here. However, this looks more like an ending diagonal, which could push us well above $7. So we break out. We get back above this. I'm going to put this, 1 to get my right. So we get back above this 314. It's got a good shot at continuing. It does. I can't say it doesn't. My bias still is the ABC, or it's a shallower C and it comes back and tests this 208. That would be optimal. But structurally, it's not, there's really not a clean vision, really because of this consolidation down here. At the end of this floor, we really didn't come out and test 50% of the body of this leg here. So it wasn't euphoric at all. A 236 is shallow, a 382 is not quite as shallow. 50% is where we want to be. The 618 is normal. Now note the corrective leg from this low to and this high, we tagged the 618 roughly at the 218. Little higher than that as far as price. So, it's not done anything wrong. It's not a bad name to hold right here, even at the price that we're at, is my thought. And just looking at where that 5 could go, the risk reward is decent to the upside. And there's not a lot that looks real decent for the upside as far as I'm concerned. All right, looking at Amazon, we've definitely got up and out, hitting a little rejection. We've got a little resistance right overhead now. So we are, roughly this line here. So I would expect us to tag that and maybe reject. And that should be a good launching pad. As long as this 237.68 holds, we don't want that structure to break. However, it's a good chance it does. It's probably going to be pretty noisy. Just looking at how we've sort of played out this, and I'm just going to put an impulse here just to give you a visual that, we probably do something like this and end up skirting that line. So we probably do get a better price, and we probably do break that and test this shelf at some point at 221. So that is where I think I get more interested. just with that look. Microsoft should have never sold it. The idea worked. So I'm going to say this is our one. However, I'm looking at this as a triangle, or at least the structure I decided on based on this look. Our fibs are measured off of that trough, this peak, and that trough. So the 618 is back around 486.70. I think it's very viable, which happens to be just where a 3 would land. Then we should come back in and test the base of this formation. And then that becomes the launching pad. So to me, that spot right there around 416.82 would be the optimal entry. All right, looking at AMKR, we could get a decent pullback here if it's not this impulse. Impulse looks very aggressive on this chart. The way I've got it looks very, I can't tell you what it does. What gives me some conviction that we're going to continue to be impulsive is this little push in RSI rating. So we have a confirming high, but we have kind of a double top. That's usually pretty euphoric. So when you look at the internals, sometimes they tell you a little different story. Are we wanning in RSI? No, not really. So it's still has a little more upside, and what I mean by squeeze in the upside. So RSI needs to pull back a little bit to about 64 and we continue to climb price. So I think the highest likelihood is that we do end up putting in a wave 3 with the longest wave, which puts us back up towards $300. So I like the look here. I would not probably close this if I had an open position until it broke 57.09, as long as that shelf holds. Reason is this is a clear wave 1. We got a very shallow wave 2, and actually, let me just throw a fib up there so we can see exactly where it pulled back to. I can click the right button. So, and we did not even pull back to the 382. It was a 236 or 382, excuse me. So we pulled back to the 382. So it wasn't as shallow or as euphoric as it could have been. But at the same time, we didn't get back to the 50% fib or either or the 61.8. So to me, that still gives me some bias to the upside as far as the look. All right, let's look at ENS. Also, another aggressive looking tape to the upside. So unless it closes below this 194.77, same exact view on ENS. As far as that's concerned. Fiserv, nice spot. We actually had this noted for potential long here on a wick off that bottom, but I also had mentioned that I would like one more divergent low, and we've pretty much got it. So, right now it's targeting $100 from here. This is not a bad entry. Where my stop would be at the 55.76 that breaks. And let me just come out to the monthly on this for a second to give you a visual why, because this is our shelf on our prior leg that we ran all the way up. It breaks below that. We've now got a reversion to the mean candidate. So you don't want to hold it below there as far as that looks concerned. So, all right. Well, that was pretty quick this morning. And part of the reason is the structure that's going on with DRAM. There are a number of suppliers that are sold out through 2030 at this point. And there is a huge supply gap for the existing CapEx and the data center. So I think we're going to see a little rotation here. And one thing with at least the history with photonics or DRAM is that they've always been very euphoric when they decide to move. I mean, notice how we stayed in this flat for God knows how long, from 2020 to 2025, so roughly 5 years. And we got this huge breakout. Now, the nice thing about the way this looks is very similar to where we were looking at ENS or MKR. Is we have a very defined trend. We have peaking drive 1, peaking drive 2, peaking drive 3. So this is our one. If we get any pullback to about 560, that's where I'm looking at that as an optimal entry. Just going to keep running through these. AAOI, we've obviously had a decent position on this. However, I think there's a good chance that it pulls back. So peaking drive 1, peaking drive 2, peaking drive 3. So I've got a fib box right here. So I like this back at about 77.37. So if someone wanted to put in a good to cancel order, over the next 3 months, if we did pull back to that 77, both Light and AAOI would be a good name to do that. Now let's take a look at AEHR, and I like to pull back to about 60. I didn't rework this one. I just left but a pullback to about 60, 54. So that would be my gold box or green box roughly right about here is what I would look for as an optimal entry back to the long side. Now, AVGO, I think we get a pullback first. We've got peaking drive 1, peaking drive 2, sort of a stop run kind of look here. We have this huge broadening formation. I would like it for a pullback. I'm just going to throw my new or the new fib look that I'm using. So to me, pull back to 360 is where I would really like to take a look at that, right at that particular range. I don't think we break below this. And that is simply because of what's going on between the photonics demand and the DRAM demand. And I don't see that waning at all, which is why I sort of shifted focus to it a little bit. Now, Marvel, I do think that we get a little pullback on this. And again, this was another name that I'd flagged or called out, and I don't have a position on it. All right, so pull back. Anything to about this 120 box is a good spot to jump on board with there. So a good to cancel order, maybe a piece at 120, 115, and 105, something in that range if they get filled. Fabrine FN, any pullback to roughly about 40 or 425 is a good spot for an optimal entry. Coherent Corp, pull back to maybe 242. And then Ciena, any pullback to about 304. Similar look. And GLW, I didn't get to that one, so let me just throw that up there. I'm going to measure this whole block simply because it looks like our 3 peaking drives are in, just in a quick look. So any pullback to about 108 to 92, roughly in that range, is a good spot. MTSI, same kind of look, or it's kind of got 5 drives though, or 4 drives. So any pullback to maybe that 200 to 205 range, really all the way down to about 164 if we get a decent pullback on. However, this is a pretty solid trend. We've got our peaking drive, our confirming high on really what is the second mount. So this is our first mount. So this is the second mount. So we got peaking drive 1, peaking drive 2, peaking drive 3. If this confirming trend support, or if trend support doesn't get breached, this is a trend that could, really substantially extend, especially with the dynamics of what's going on with the photonics and DRAM as far as that's concerned. So if it doesn't break this like 226, that's also a very euphoric kind of look for continuation. And we have the demand metrics that should drive this. So I would think that this is mound 1. This is mound 2. We should get a mound 3 with a lower point of RSI that builds out up here. So either we're going to get, now this was an ABC in 1. Well, I guess we can call that 1, 2, 3. So it would be very similar as far as the look back to the upside above this 3 peaking drives. So we get any pullback really, and 229 even, I would think that it's got a decent push back to the upside. So, all right, well, I'm going to end with that, folks. Any other questions? Perfect. Great trading, folks. Until next time.